I'm back in the Tesla shirt, which means we're going to cover another fundamental analysis metric. So in this video, everything you need to know about PEG. So what is a PEG ratio? Well, a PEG ratio can help you find growth at a great price. So how do you calculate PEG? Well, you basically take the PE ratio and you divide it by the growth rate of earnings. Now, this is the tricky part. In the Yahoo example that we're going to take a look at in a couple of minutes, you'll see that they use the 5-year forward earnings growth. And this is basically a forecast. However, many people, they use a trailing growth rate. And trailing, and remember TTM, that means trailing 12-month period. So you can use 1 year, 3 year, 5 year for earnings growth. Just remember that whatever you're comparing it against, that you have to be using the same exact timeline for it. So you take the PE ratio and you divide it by the growth rate, however you are attempting to calculate it. And what this does is the PEG ratio determines stock value while also taking into account the company's expected growth or historical growth. Again, that depends on if you're using forward growth rates or if you're using trailing growth rates. And remember, this gives you a bigger, clearer picture. A low PEG and a PE value that's low can indicate a stock that may be undervalued, and using other fundamental analysis, you might think to yourself that it may be a good investment. And you should always compare a PEG ratio of one investment to another in the same industry. So again, you want to be comparing apples to apples, not apples to pineapples. And always bear in mind, the two that you're comparing, were they calculated the same? Were they using a forward PEG or a trailing PEG? And the timeline, was it the same? Was it 12 months, 1 year, or 5 years? Now, the tricky thing with a PEG, same as PE, you cannot have a company that's not profitable. Then you can't use the PEG. But with a PEG, you also can't have a company that is having negative growth rates. So they're doing worse and worse with growth. A PEG rate wouldn't really apply here. And so PEG gives you insights into whether the company has a high enough growth rate to justify its PE. PE is a snapshot, whereas PEG ratio can give you a more dynamic picture. It adds an element for much more helpful analysis. So again, if you're evaluating a company based on fundamental analysis and it has a low PEG ratio and a low PE, that may actually prove to be worthy of doing more research, using other fundamental metrics, maybe even using technical analysis, doing as much DD as you can. Remember, none of this is financial advice. I am not a financial advisor. I'm just trying to educate myself and you on what a PEG ratio is. And also remember, a PEG ratio does not take into account any dividend payouts that are occurring, which may skew the picture a little bit. So always be mindful of all these different factors when doing fundamental analysis. So now let's take a look at a real life example, and then we'll try to dissect what the implications are. Okay, so right here on Yahoo Finance, I pulled up Intel and AMD, which are direct competitors. They're both profitable companies, and they're both expected to have positive growth rates. And so in this case, it's actually very helpful to go ahead and compare PEG ratios. Where can we find PEG ratios? Well, as we covered before, you can scroll down here, go to statistics, and you will see certain fundamental analysis valuation measures. Now, keep in mind, you can only see the quarterlies, not the monthly or annual, because you need to pay for that. Everyone's trying to collect theirs, and Yahoo Finance is trying to collect it as well. So if we take a look here, the trailing PE for Intel is 10, and the forward PE, remember this is future prediction metric, is 14.29. If we go to AMD, we can see that their trailing PE is much higher, 42.49, and their forward PE is also in the 40s. So you might say to yourself, wow, Intel is extremely undervalued. However, the PEG ratio, which takes earnings per share growth into account, is showing a different picture. It's showing that Intel has a 2.86 PEG ratio, whereas AMD has a much lower PEG ratio of 1.22. And we can go further and we can actually calculate the forecasted 5-year earnings per share growth. Because we have the trailing PE And because we have the PEG, and because the PEG ratio is calculated by PE divided by earnings per share growth rate, we can go ahead and take the PE value, divide that by PEG, and see what the 5-year forecasted growth rate is. So bear with me, this is an extra step just in case you're curious of how this is done. So for Intel, we could take 10.05, which is their trailing PE. We can divide it by the PEG ratio, so divided by 2.86. And you will see 3.5 here. And this is a whole number percent, so you don't have to move the decimal point over. You just see that the expected 5-year growth is 3.5% based on projections. I don't necessarily believe this. I think that Intel is working on controlling its supply chain. I think it's expanding. It's going to see a much bigger growth rate than 3.5%. But this is what is projected for 5-year earnings per share growth. So let's remember 3.5% for Intel. Now let's take a look at AMD. So we take the PE ratio, the trailing PE, which is 42.49, and we divide that by the PEG ratio, which is 1.22, and we will see that the growth rate for AMD is much rosier, 34.82%. This is rather large, and this is why people are okay purchasing AMD today at prices that have a very high PE. Now, when you go and compare whether Intel is a good investment or AMD is a good investment, you should always look into the other valuation metrics and decide for yourself. Me personally, I'm going to take PEG ratio with 5-year expected with a grain of salt and a raised eyebrow because it is a forward-looking metric, which means there's a lot of predictions going into it. And for 5-year predictions, that's quite a lot. As we saw with the pandemic, with the chip shortage, with the supply chain issue, cargo ships sitting off the coast, nobody ever thought this would be the case 2-3 years ago. And so you have to take it with a grain of salt because the world, finance, stocks, it's an ever-evolving beast, and future forward predictions are not always accurate. Congratulations for having an above average attention span and sticking around till the end of this video. I hope you learned something new. PEG ratio for me was like a great tool to use when doing fundamental analysis, and so I wanted to share it with you guys. If you enjoy this video, if I helped you out, please do help me out. Give me a comment, give me a like, give me a subscription. I'm trying to hit 10K before the start of the year, and I think I'm on par for it, but I might just be cutting it very close, and I like hitting my targets. So if you can help me out, if you're not subscribed to the channel, subscribe to the channel, and I will see you guys in the next video.